to you. We'll email that out, and we'll also have that up on the website. So, like I said, don't panic if you feel like there's a point you don't understand. We are available to discuss those things. So today we're going to review the CARES Act update. But before we dig into that and the PPP and all of those types of things, I just wanted to provide a quick update on the Families First Coronavirus Response Act, the FFCRA. We did a presentation last week talking about emergency paid sick leave and the extension of FMLA for most companies. During that time, the interpretation of the law was that any company that had furloughed or temporarily laid off employees, those employees are considered still active and they would be eligible for emergency paid sick leave. Well, a couple days later, I think it was essentially Saturday morning, the Department of Labor actually provided a clarification stating that furloughed employees are eligible for unemployment and therefore not eligible for temporary, for emergency paid sick leave. And you can find frequently asked questions. The Department of Labor actually put out the link here will take you to a great one sheet. It's a little bit more employee facing, but as an employer, it goes quite in detail of different scenarios and who's actually eligible for that leave. So I wanted to share that information. And just a quick refresher on emergency paid sick leave reasons. Essentially emergency paid sick leave, it's in addition to any other sick or vacation or PTO. For full-time employees, it gives them a maximum of 80 hours to either take care of themselves or family members who may have been impacted by the virus. You'll see reasons 1 through 3 here really pertain to the employee themselves. Either the employee is under quarantine from a government agency or their healthcare provider, or they believe that they may have the virus and they're seeking medical care. In those 3 situations, they are eligible for up to 80 hours at 100% of their wages or of their hourly rate. For reasons 4, 5, and 6, reasons 4 and 5 really apply to if they're taking care of someone else. So either they have a family member who's under quarantine for the reasons above, or they don't have childcare. Their child's school or preschool is closed, and they can't work as a result of that. That also qualifies them for up to 80 hours of sick leave, but at 2/3 their rate of pay. And reason number 6 is a little bit, I call it a little bit nebulous. I think that's the one that's somewhat the most confusing for people, is because it says the employee is experiencing symptoms that are similar to those, listed by the CDC for COVID-19. And I really think that that's included to kind of bridge the gap between the employee feeling like they're sick and actually getting in front of their healthcare provider. But those days are paid at 2/3 of wages as well. And I just wanted to share for those of you processing payroll that we did add pay codes associated with that leave in DASH. The COVID care, the sick other, the first one listed, that applies to 4, 5, and 6. It's at the 2/3 rate. The third one, the COVID regular sick self, that was probably a little bit self-explanatory. That applies to if I myself am impacted by the virus. That's reasons 1, 2, and 3. And then of course the FMLA is for the extension of family medical leave. And just to quickly touch on that, for those of you who don't know, the other caveat in FFCRA was that family medical leave is extended to essentially all companies. It used to be companies with 50 employees or more, and that means an employee can take mostly paid protected leave for up to 12 weeks if they have to care for their children because their child's school has been shut down. And those are available in the payroll system because you really do want to be able to track this, and that'll become a little bit more apparent, when we touch on tax credits. Now, actually, before I skip ahead, something I should mention, regarding tax credits associated with FFCRA. Employers may be eligible for a tax credit against the employer portion of Social Security. And we've been waiting on the IRS to actually tell us how that occurs. They did release guidance yesterday, I think towards the evening, and our developers are actually jumping on how we're going to address that within the payroll system. So know that more updates on that are coming. We just need them to do it fast, right? Always waiting on the IRS. I'm just kind of going to open this up a little bit, but so let's do a broad overview, right, of the CARES Act. You know, it's really meant for small business assistance. It's providing $349 billion in forgivable loans to small businesses, really for the purposes of paying and retaining employees. And that's anybody with less than 500 employees. It includes nonprofits, self-employed. They're making the qualifications very broad as to who can participate in this program. As I think some of you heard Regina mention earlier, it opens tomorrow. So the banks have been, you know, very busy trying to get prepared for that. The loan does have to be, you know, applied through a SBA approved lender, which is, there's a lot of them. But it's, you know, look, we all anticipate that many companies are applying as of first thing tomorrow morning, and it's open through June 30th. The program also adds an additional $17 billion in debt release for current borrowers. So those who already have an SBA loan may get the principal and interest deferred for the next 6 months. And as you can see, that's going to help a lot of current borrowers. It's estimated about 320,000 currently in the States. The last caveat is an additional $10 billion in immediate emergency economic injury. Basically, that's 10 grand of fast free money. And we'll talk more about the details there, but and that applies to even you know, independent contractors and the self-employed. It's really meant to get you through kind of an emergency. So I'm going to focus a lot on the Paycheck Protection Program, because that applies to the vast majority of our clients, and also to our world of payroll. That's section 1102 of the CARES Act, and that's the federally guaranteed loan program that will cover payroll costs during the crisis. And we're going to talk a little bit more about what a payroll cost is, because they're not all created equal, and some of the details of how to navigate this, right? So any business that meets the qualifications can get a loan of up to $10 million. And it's important that you know that the SBA uses NAICS codes to determine what the maximum headcount and revenue is. So when you're applying for the loan, they're looking at not just average payroll, right? We'll be talking about that and how to calculate it. They're looking at your average payroll for usually the last year, but they're also looking at your industry to you know, evaluate, you know, is the amount that you're requesting make sense, and does the headcount that you employ make sense for your industry? So just be aware of that. You know what your NAICS code is, and your banker's going to ask for it anyways. The funds cover the 8-week period after the loan is made. It's 100% guaranteed by the Fed, low interest and no fees. Repayments of the loan will be deferred for at least 6 months, and we'll talk a little bit more about that. There's also the prospect of forgiveness of these loans, and that's really based on employee retention. I kind of mentioned earlier that the purpose of this is to help businesses retain their employees. So if you retain your headcount and compensation levels, the loan can be forgiven up to 100%, which is a lovely thing, right? So let's talk about what's covered in the loan. What can you use the funds for? It's up to 2.5 months of payroll costs, right? It's looking at the monthly average, $100,000 wage cap per employee, and we'll talk a little bit more about that. And I have gotten the question a lot of if 1099s or independent contractors that my company pays are included. The short answer is that's not entirely clear right now. You'll see that I've sourced a Premier Bank here. Their application does state W-2s, W-3s, and any 1099 miscellaneous. But right now I haven't seen anything specific as of yet from the government that addresses if I'm a company that pays employees, but I also have some independent contractors. And I'm assuming clarification's coming, but right now I would say that, if you have 1099s that your company pays, and you want to continue utilizing those folks as part of your business operation, talk to your banker about that. In addition to wages, it will also cover your mortgage and lease, your utilities, and then there's another category that also I feel like is not entirely clear right now, which is other. You see it on the applications, and we're not entirely sure if that applies to inventory or to purchasing, supplies and things like that. We again imagine that the not the Department of Labor, but the SBA is going to put in more guidelines here. But that's another point on which I would say, talk to your banker. Right now, the way everything's written, it almost all exclusively says, wages, mortgage and lease, and utilities. So just be aware of that. Let's talk about payroll. I said earlier we define what payroll costs are, right? So what are wages, right? Employee compensation is salary, hourly wages, commission, and tips. All of those things are comprised of what you pay employees and can be included in the calculations when you're looking at what your average, monthly payroll essentially is. And I do also want to remind you that wages are capped at $100,000 per employee. And so if you have people on staff that make over 100,000, let's say they make 150,000 or 200,000 a year, the SBA is only looking at the first 100,000 of their wages. I'm going to provide a little bit of an example that illustrates how that works. Again, 1099s, we're not 100% sure, but do discuss that with your banker. Other things that are part of the definition of payroll costs do include your employer taxes. So not just the employee's wages, but your employer portion of taxes for federal, state, and local can be added into this calculation as well. It also includes the cost of employee benefits, and that includes vacation, PTO, other sick leave, right? So if you're doing California sick or Los Angeles municipal sick, those are considered employee benefits, and that's part of the cost as well. Your insurance premiums that you contribute for your employees, health, dental, and vision insurance, retirement contributions, if you can, have a 401k match, for example. It also includes severance packages. So if over the course of the last year you have, terminated someone and had to pay severance, that factors into the calculation as well. Average monthly payroll, we've gotten a lot of questions about this lately. How do I know what that is? Well, the nice part is we have a report for that. You can, at PayrollCentric, you can reach out to your rep or just send in a ticket to support, at payrollcentric.zendesk.com and ask for a report that's used to calculate your average monthly payroll for the PPP, and we will send it over to you. But for the majority of companies, what you're going to be looking at is the average monthly payroll for 2019. Seasonal employers may use the average for the period between February 15th of last year and June 30th of last year. So they said it's very specific dates on that, but they are trying to take into account companies whose staff may fluctuate, right? And for brand new businesses that don't have history, they're allowed to use the time period from January 1st of this year through February 29th. So basically, you can take that 2 months of wages and use that for the purposes of calculating your average monthly payroll. And here's my little example, actually a couple of examples here. So you can see that in example one, I've got a company with 5 employees. Each of them makes about $50,000 a year. My total payroll for the year then would be $250,000. So if I divide that by 12 and get my average actual monthly, it's 20,833. Now, this example is very clear, right? I wouldn't just necessarily be looking at the wages. I'd be looking at taxation and kind of all the other things we mentioned. But I just kind of want to give you an idea of how it works. So that's my actual average monthly. Now with the PPP, my average monthly would be the same because none of these employees make over $100,000. Now in example B, I've got 5 employees, but I have one other employee and they make $200,000 a year. I have to subtract that additional 100,000 to get them down to come up with my PPP average. So you can see that if I just did a straight calculation of my average monthly, I'd be at 37,500. But for the purposes of the PPP and for my SBA loan, I'm reducing that 100,000, and my real average monthly for that is going to be 29,166 and change, right? So that's just something to be aware of when you're making the calculations. We can provide you all the data, of course. You're going to, as an employer, kind of want to make those calculations because you really know everything, not just that you've paid in taxes and payroll, but potentially, severance and benefits and other things like that. Those would be included in the reporting. But you kind of want to take a look at being able, of course, to maximize your average monthly payroll, right, for the purposes of the PPP. And this kind of concept will help you do that. Let me move on to loan forgiveness. Oops, sorry, folks, because we said we'd talk about that a little bit. Section 1106, so it really addresses that this is a loan, right? But you may not have to pay it back. For lack of a better word, paycheck protection sounds like free money. And I think it really is going to be for a lot of employers. If you maintain, like I said, if you maintain your head count, if you maintain the pay rates on your employees, this loan, you're not going to have to pay this back potentially. Now, there's a few caveats. The amount of forgiveness is based on the amount of employees you maintain. Because, like we said earlier, the purpose of this is to really keep people employed. So you have to have at least 75% of the forgiven amount has to be used for employee wages. So remember on that slide where we said you could use funds for mortgage and a lease and things like that? If you borrow, $100,000, right? 75% of that has to be used to pay your employees. The other 25% can be used on mortgage and lease and things like that. That's actually how you maximize the amount of forgiveness. That's, if you want the loan to be 100% forgiven, that would be the way to go about it, right? One of the other wonderful things that they included is that the amount that's forgiven is not considered income for tax purposes. So, you can imagine if you take a substantial loan and that's forgiven, in a typical situation, you would have to pay all the tax on that. Under Section 1106, that's not the case. Now, what happens if 100% of the loan is not forgiven, right? Let's say that, for business purposes, you're only able to retain half of your staff. And that's a very real consideration for a lot of folks right now. You would still get a portion of the loan forgiven, potentially, and then the rest would continue to be a loan, but it'll be 10 years with interest not exceeding 4%. And we've seen interest rates kind of floating around as low as 2% up to 4%. I mean, I think most of you probably realize that that's a phenomenal rate, and to be able to borrow money and not necessarily have to pay it back for 10 years is really good. I feel somewhat positive about some of the things that in the CARES Act based on that. So what happens if you already have a loan? I mentioned that at the beginning that funds have been set aside to address that as well, and that's Section 1112, and that covers current SBA loan recipients, and you're going to get 6 months of relief of the principal, interest, and fees, right? So they're deferring some of that off, And most banks have also been encouraged to extend the duration of loans. In essence, everything's kind of getting pushed out in order to account for the crisis. And if you have an existing loan, that doesn't mean that you can't apply for the PPP. You can receive additional funds. Our last section before we talk a little bit about tax credits is the economic injury grants. Now that's that $10 billion I mentioned, and I said like free emergency money right away. The point of this, it comes from the SBA's Office of Disaster Assistance Infrastructure. It's a $10,000 grant that is meant to address your needs immediately. This can be applied through the bank, but you can actually apply for this directly through the SBA right now. And once you're considered eligible, candidly, I'm not sure how long that takes, but I know they're fast tracking a lot of this. You will receive the funds distribution within 3 days, and that's actually written into the law. So they really are trying to address, immediate financial needs that are considered crisis. This also applies to independent contractors. That's something that has come up. If someone is a 1099, if they're an independent contractor who runs their own business, they're not eligible for unemployment, right? But they may be losing, wages right now because they are losing clients. They're eligible for this $10,000 grant. But that includes businesses with up to 500 employees. It includes private nonprofits, co-ops, ESOPs, self-employed individuals, and it really covers a lot of the same things that the PPP does, right? Payroll, mortgage, rent. I think this one may be a little bit broader in regards to operating expenses, but I'm not 100% sure. And a quick note on, private nonprofits and churches. The law does state specifically with religious institutions that the funds be used specifically for business purposes, like again, the paying of employees, the operating of, like a thrift store or things like that. So it's very specific to that, but they are included. So let's move on to tax credits. I'm trying to be informative and succinct. I know that everyone's busy, so I appreciate your time. We've got a few more slides to go to talk about tax credits. So the employee retention tax credit, the very high level view of this is essentially you can get a tax credit for up to $5,000 per employee. Now, the $10,000 per employee, I keep hearing that number a lot, but it's actually $10,000 per employee divided by half, which means a $5,000 credit per employee. You cannot take advantage of these tax credits, right? Of the retention tax credit or the deferral that we're going to talk about in a minute, if you are getting the PPP. So if you're going to apply for the SBA loan, and the Paycheck Protection Program, you can't necessarily do both. We've got a little example that kind of breaks down potentially the financial viability. I think for most businesses, they're looking at the SBA loan and applying for, the Paycheck Protection Program, because at the end of the day, we can kind of call it what it is. It's free money, right? So under the Employee Retention Tax Credit, like I said, it's $5,000 per employee. The credit is specifically on the employer portion of Social Security tax. And it's important that everyone understands that. What we hear a lot is that it's a credit on taxes, as in taxes as a bucket. But what I've noticed about all of these tax credits is they very specifically apply to only the employer portion of Social Security tax, not your regular federal income tax, not Medicare. So do be aware of that. There are caps and restrictions on the wages that qualify, and there are two primary criteria, and that's that you've either fully or partially suspended your operations due to the virus. Basically, you've had to shut down, and that your gross receipts decreased by 50% or more compared to the same quarter of last year. The IRS is kind of yet to issue guidelines. Again, it's up to the government to kind of define what, right? That happens in the acts, and then it usually takes a couple of weeks for the IRS to really define how those things occur. And that's usually kind of what we have to wait for before we can completely address that within payroll. But we are, addressing that as quickly as we can. The other option for some employers is tax deferral. Now, again, it's not available if you are utilizing the SBA loan program, but it does allow you to defer the employer portion of your Social Security tax until January of next year. And that deferred tax, as you can see, doesn't really have to get paid back for 2 years. Half is due by the end of 2021, and the other half is due by the end of 2022. But of course, this is a deferral, whereas the PPP is a potentially forgiven loan. So again, for most employers, the loan with potential forgiveness and the opportunity for free money from the government is a little bit more advantageous than a tax deferral. And we took those same examples that we used earlier, example A and B, and we kind of added in what you would be looking at in Social Security employer deferral, right? So you can see with our 5 employees paid at $500,000, the amount of my deferral would be, about $15,500. Now, eventually, I'm going to have to pay that back. Whereas if I look at my, the amount I would receive under the Paycheck Protection Act Paycheck Protection Program as part of potentially 100% forgiven loan, I get $52,000. So I can either defer $15,000, right, in taxes for a couple years, or I could potentially receive $52,000 from the government. I think a lot of employers are going to choose this option, but that's up to the business owner, right?